student to share ideas, gain knowledge, and relate them to other aspects of the life. Although the pandemic was a challenge for us, we have not ceased our aim to spread knowledge. Instead, the pandemic has turned out to be a pleasant surprise since it has given individuals from all across the world the opportunity to associate with us. We understand that behavioral finance is a topic that is still evolving, and there are still very few researchers in the concerned domain. Therefore, since the last 5 years, our department has collaborated closely with the behavioral finance professional experts who are working in this domain. Therefore, since the sir, I'm getting some request. Okay. Therefore, since the last 5 years, our department has collaborated closely with the behavioral finance professionals from all around the world, aiding them in their exploration of the domain. The conference is one of our way of assistance to the aspiring researchers. By arranging this conference, we hope to provide a big platform for those who are working in this field. Thus, the two days conference devoted to current research and theory as well as the future's perspective related to the behavioral finance, and it will give participants a platform to exchange ideas, discover novel opportunities, meet inspiring authors, broaden their knowledge. Along with the journey, we will learn from the various sessions that broadly cover a wide range of the topics related to the fundamental research in behavioral finance to its application. To give an idea of what you can expect and what we hope to give over the next 2 days, the conference offers 120 presentations, including a keynote speaker, paper, and panel discussion. We hope this 2-day conference would help students expand their mental horizon and help them to exploring the scope for research in the behavioral finance. So I request all the authors from across the country to make use of these 2 days to their best. So now, moving forward, it is my honor to introduce to all of you the guest speakers and the resource persons of today's event. We welcome, for welcome address, we have Dr. Shaleen Kumar sir with us. Dr. Shaleen Kumar sir is a head of Department of Management Study. He has teaching experience of more than 12 years. Sir has published many research papers in the reputed journal. So, without any further delay, I invite Dr. Shaleen Kumar sir for the welcome address. Welcome, sir.
Okay, thank you. Thank you, Kajol. Am I audible?
Yes, sir.
Thank you, sir. So, on behalf of Department of Management Studies, IIIT Allahabad, as a head of the department, I would like to welcome all the participants to this international conference on behavioral finance. It was a 7-day package, I say. It's not a 2-day package. It was a 7-day package where first 5 days were devoted to the discussion over behavioral finance, because we all know that first 5 days were the summer school on behavioral finance, and now these 2 days are for international conference on behavioral finance. So it is a package where first 5 days were having the fruitful discussion on behavioral finance, and now next 2 days are where the participants will get an opportunity to showcase their research. So with this wonderful package in mind, I congratulate the team, Professor RanjitSingh sir, for thinking about this complete package where our summer school and conference both are clubbed. Where first 5 days there was the exchange of ideas, where the research potential in the field of behavioral finance, it was discussed. What may be the topic, or what may be the academic thought into it, it was discussed. And now these 2 days are given to the participant to showcase their knowledge, to showcase their piece of research work in the field of behavioral finance in the form of this wonderful international conference. So with this backdrop in mind, I would like to welcome Professor Nawab Ali Khan sir from AMU Aligarh. And sir, being head of the department, on behalf of the department, I would like to welcome you to this international conference, and thanks for accepting our invitation to deliver a keynote address on such a prestigious conference on behavioral finance. I would like to welcome Professor Brajendra Singh sir I know him, and on many platforms we have shared together. So thank you, sir, for being here and accepting our invitation to be the part of this conference. I would like to welcome all the participants to the conference who have contributed. I know some of you were also the part of the summer school now, and some of you have directly participated by sending your manuscripts or by sending the piece of your research work in the related areas of behavioral finance. So I welcome you all to this conference. I trust that this conference would be a platform to discuss your research idea, to explore what may be how you may improve your research work. What may be the and you will also be getting exposure to the areas where you can work further in the future in the related area of behavioral finance. So I trust that this conference would be very efficacious and fruitful to all the participants, and at the same time you will also be exposed to the expertise of the session chairs who would be coming to share to chair the sessions and would be discussing their views on your research work, your piece of research work which you are going to present over here. This behavioral finance, it's a very important field because here we club the psychology, very important variable which affects our decision making, and we relate it with the finance and economics. So actually it is a subfield of behavioral economics where we see the impact of psychology on our financial decision making. And it is very well understood because when anyone takes birth, then first thing which he or she understands is the money. So money is somehow it is imbibed in our decision making, and we understand after parents we understand that money is very important. So somehow the psychology plays an important role, and behavioral finance, this gives explanation for the psychology behind our financial decision making. And when we are living in this era of social media, where now the communication is very rapid, within no time it reaches from India to US. So it doesn't take time, then this psychology becomes very important. So because because if we just see the traditional finance theories, then we may discuss the EMH, efficient market hypothesis. But efficient market hypothesis is still it is not true. Why it is not true? Because a lot of psychological factors it plays an important role. It means the market is not actually reflecting all the information. So what is stopping the market to reflect the information? So a lot of psychological variables play an important role in predicting the stock market. And as I told earlier in the summer, when I was there in the inauguration of summer school, now this behavioral finance, it is not confined to the stock market. It has actually proliferated to many other areas. If you name the sector, the behavioral finance becomes important because psychology, wherever we talk about the decision making, psychology becomes important. So here, where in behavioral finance, we wish to know that how the psychology affects the decision making when it is related to the money, and because of the psychology, lot of biases are created, and those biases are affecting our financial decision making. That's why the models which we discuss in the traditional finance, like the Farmer French model, EMH, lot of models are there in the traditional finance theory. They do not give the expected results. The reason for discrepancy is the psychology of the decision maker, the investor, or anyone who is taking financial decisions. So that explanation we can get with the help of the behavioral finance. So this is very interesting field, becoming very important because we are living in a era of communication. We are living in the information age where everybody is connected through social media. So psychology is changing very rapidly, and so there's a need to, because anyone who has to take decision, whether they are marketers or the corporates or even the government, whenever they have to take decision, this study of behavioral finance will become very important. We can just see the IPO of LIC. What government thought, it did not happen. The share is colliding like anything. What happened to the Paytm? So it did not perform, the IPO did not perform to its expectation. And I would like to quote the IPO of Delivery. One company recently it brought its IPO, that company name is Delivery Limited. That Delivery Limited, you know, that company was having the negative performance for last 4 consecutive years, and now its share is doing good. You just talk about the Reliance Energy Limited. It did not have any project in hand and its share was doing good. So how it can do good without having any projects underneath of it? So it means somehow the psychology plays an important. These examples are sufficient to discuss that the psychology plays an important role. So in this context, the study of behavioral finance becomes very, very important. Whether they are the corporates, the government, any stakeholders, they have to have some prior understanding of the behavioral finance before they decide any policy, before they take any decision. So with this background in the mind, because we have the experts, we have keynote address will be delivered on the same around the same theme line. So I trust that participants will get exposure to it. They would like to they would be improving their work in the light of discussions happening at this platform. I trust, because this is just the beginning. I congratulate Professor Ranjit Singh sir for discussing, for just thinking of such a noble idea, and you know, the summer school was a fifth. This was a fifth summer school which happened. So I am happy to learn that our department is actually coming up as a center of excellence, or it's becoming a center of excellence for behavioral finance. So my wishes are with the team. I'm happy to be the part of the team, being the head of the department. So and actually it has also, these kind of events have also resulted us and have also benefited us in terms of getting the admissions. Our admissions are improving at a very fast speed, because the department is also getting momentum. So somehow these kind of events, they are also again affecting the psychology of the people or public outside and benefiting us positively. So with this outside, I congratulate Professor Ranjit Singh sir, and I wish that this program, I know, why should I wish? I know that this program will become a success. And last 5 days, I know the program was delivered by many eminent academicians from India, and like ranging from IIMs to all the top-notch universities of India. So it was highly successful, and now we are just going to give that's why I started with that. This was a complete package where we had a discussion over the fundamentals, and now we are going to showcase that how those fundamentals can be translated into a piece of research work. So with this, without taking much of time, so I would like to congratulate and wish that this program would be a successful one. And again, welcome Professor Nawab Ali Khan sir, Professor Vijendra sir, for coming over here and accepting our invitation to be the part of this noble effort. Thank you, sir. Thank you, everyone.
Thank you so much, sir, for your wishes, and thank you so much for your thought, for throwing light on the different aspect of behavioral finance. Now, I would like to invite Professor Ranjit Singh sir to give idea about the overall program. Welcome, sir. Over to you.
Thank you, Kajo. So first of all, Honorable Nawab Ali Khan sir, Professor Brijen Singh sir, Dr. Sasikant, Dr. Saurabh, our respected head of the department, Dr. Sailendra Kumar, students, research scholars, and academicians from all over the world assembled here or submitted papers in this conference. Thanks for giving me an opportunity to host this conference. And as stated by our honorable head of the department, that this is a complete package. We just tried our best, and as it is rightly stated by Paulo Coelho that किसी चीज को शिद्दत से चाहो तो पूरी कायनात उसे मिलाने में लग जाती है. The entire universe, the whole universe conspires for your success. So our summer school was successful for 5 days. Fifth summer school was very successful, and now we are in the first international conference first of its kind in world that absolutely completely dedicated to the discussion on behavioral finance. After hosting 4 summer schools on behavioral finance, we thought that there should be some platform to discuss new ideas, some budding ideas, where the researchers can discuss anything, since it is an evolving discipline, behavioral finance. So there has to be some platform where we can discuss anything, so that that may contribute to the development of the discipline. So with this objective, we have organized this first international conference on behavioral finance. At the outset, I just extend my thank and gratitude to Professor Nawab Ali Khan sir. The greatness of sir can simply be measured with this, that I just made a phone call, and without any formality, without any tantrum, like I use the term tantrum that most of the academicians of his stature that used to do that, कि हमें पहले formal letter भेजिए, देखेंगे, देखते हैं, without doing anything. Okay, what is the time? 10. Okay, I will be available. Without any formal mail, actually he has given our time, his time. So that is, sir, we are thankful from entire Triple ITA for accepting our invitation, and that shows your greatness, sir. Actual formal invitation mail goes after everything is finalized. So, sir, thank you.
Thank you.
In this summer school, we have 120 plus research papers we have received, and that will be presented over 7 technical sessions spread from today and tomorrow. Our resource persons will be from India, USA, Bangladesh, Australia. We have there's various resource persons. They have agreed to chair and co-chair or become the keynote speakers in different technical sessions. This is all about this international conference. Yes, one more thing to all the participants, that regarding the publication of their papers, we have received consent from 6 journals, although we have published many journals, but finally the quality of papers that we have received, and accordingly we have we could map that this could be suitable for the 6 journals. So accordingly we have forwarded your papers to those journals with our recommendations. And then again, those journals will have their own set of reviewers. They will again go for their review, and again they will be coming back or getting back to you directly with their reviews and comments. So that has already been processed. Thanks to all the participants, all the paper presenters, the resource persons within the department, within the institute, and outside the department or institute. So with this is the whole structure of this international conference. I will not take much of the time, and now directly I would like to like Kajol, let us invite Nawab Ali Khan sir for the keynote address. Thank you. Thank you.
Sure, sir. I am pleased to invite Professor Nawab Ali Khan sir for keynote address here. Professor Nawab Ali Khan sir started his career as assistant professor in the year 1991. Today, he is the Chairman Board of Studies, Department of Commerce, Aligarh Muslim University, and also a member of Academic Council, Aligarh Muslim University Code. Sir has been appointed as a member of NAP Peer Review Committee. Professor Khan always welcomes social and professional interaction and collaboration. Welcome, sir. We are so grateful to have you here with us. Thank you for joining us, and over to you.
Thank you, Kajol. Thank you very much. Am I audible clearly?
Yes, sir.
Yes, sir.
First of all, I express my gratefulness to Professor RanjitSingh13 for making part of this package. In fact, I like this word package, this whole package. So I'm thankful to you all for making me a part of this package. And in fact, I'm very happy this morning that Department of Management Studies, Triple IT, Allahabad is organizing this wonderful event. In fact, this kind of gatherings, whether these are offline or online mode, these are a kind of occasion for the academicians to come together. We do a lot of things every day, but when it comes to academic discussions, in fact, we are overjoyed. And this is the most important thing that we have in our lives. So before I start my theme, I would like to tell you that since the word school has been used here, so I have changed the mind now. I will be delivering my talk on this theme itself, that I'm meeting with the students in the school, in fact. So Professor Shailendraji, head of the department, Dean of the college, Professor RanjitSingh13, coordinator of this international conference on behavioral finance, Rajendraji, scholars, colleagues, dear students. Good morning to you all. The theme, in fact, is very interesting. And you will be surprised to note that recently we were making some amendment in our syllabi as per the NAP 2020, and we introduced one paper on behavioral finance. So at the time, it was arousing a lot of interest in me about the behavioral finance. So as such, the behavioral finance is basically, I can say, not my area, but whatever the unstructured knowledge I have on this theme, I will share with you. And I'll tell you a few important things which are coming to my mind regarding the behavioral finance. Ladies and gentlemen, Benjamin Graham has said one thing, that the investor's chief problem and even his worst enemy is likely to be himself. And there are three factors that influence the market, and these factors are fear, greed, and greed. Ladies and gentlemen, before we go ahead, we must understand the investor. There are different types of investors. We can call them as risk-tolerant traders, conservative traders, loss-averse, and confident traders. Because the market is impacted, or you can say that the market's behavior is impacted and determined by how individuals perceive that behavior. Investor psychology and sentiments are fundamental to whether the market will rise or fall. The stock market, performance, and investor psychology are mutually dependent on each other. We all know that there are different categories of investors. We may think of the bull investors, we may talk about the bear investors, we can talk about the savers, we can talk about the speculators, we can talk about the specialists. Savers, in fact, are those people who spend the majority of their life slowly growing their nest egg in order to ensure a comfortable retirement. Their primary investing strategy is to hedge each of their investment with other non-correlated investments and ultimately generate a consistent annual return in the range of 3 to 8%. This is the common perception of a saver. Speculators, friends, are unlike savers. Speculators choose to take control of their investment and not rely solely on time. Speculators are happy to forego the relatively low returns of a diversified portfolio. Why? Because in order to try to achieve the much higher returns of the targeted investment. That's why they are called speculator. Bull investors are those investors who expect prices to rise and so buy now for a sale later. It is a prolonged period where the investment prices rise faster than their historical average. Then, the bear investors are those investors who expect prices to fall and so sales now in order to buy later at a lower price. The chances of losses are greater here as prices are continuously falling and the end is not in sight. Specialists believe that the key to successful investing is not luck, but education. and experience. The specialists generally pick a single investing area and become an expert in that area. Some specialists deal in paper assets, some deal in real estate, and some start businesses. So, my dear colleagues and students, behavioral finance is a relatively new field that seeks to combine behavioral and cognitive psychological theory with conventional economics and finance to provide explanations for why people make irrational financial decisions. Over the last 40 years, standard finance has become the dominant theory. Academic finance emphasized theories such as modern portfolio theory and efficient market hypothesis. These theories failed to explain 2008 crash, dot-com bubble, etc. Only recently, evolving and of increasing importance, field of neuroscience has also won appreciation from the finance industry. Work of Kahneman, a Nobel Prize winner, is considered most credit-worthy in this regard. So, dear friends, this field of study argues that people are not really as rational as traditional finance theory makes out. For investors who are curious about how emotions and biases drive share prices, behavioral finance offers some interesting descriptions and explanations. So, behavioral finance is a field of finance that proposes psychology-based theories to explain stock market anomalies such as several rises or fall in the stock prices. Within behavioral finance, it is assumed that information structure and the characteristics of the information structure and the characteristics of the market participants systematically influence the individuals' investment decisions as well as market outcomes. So, what I have found during my review of this field for the purpose of giving some inputs in international conference, which is going to be a worthwhile effort of the College of Management Studies, Department of Business Study, Department of Management Studies, IIIT. So a field of finance that proposes psychology-based theories to explain stock market anomalies. So what I have seen here, what I have mentioned here, that within the behavioral finance, it is assumed that the information structure and the characteristics of the market participants systematically influence individuals. It systematically influences the individual's investment decisions as well as the market outcomes. That's what our main focus here is. So why is it important? It is necessary because technical analysis assumes that people act rationally. And if we talk about the importance of the behavioral finance, not only in view of the importance of the conference being hosted by the IIIT, but in other words also, in other way also. So we can see here that it identifies and understands why people make certain financial choices. It can help build portfolios better suited to their clients. It helps advisors differentiate their services to better serve their clients. I hope you understand the significance of the behavioral finance in the light of these points. So behavioral finance attempts to understand and explain here what we are talking about is the actual investor behavior in contrast to the theorizing about investor behavior. It differs from traditional or standard, you can say, finance, which is based on assumptions of how investors and market should behave. Because here is the involvement of the risk. We know that the risks are of two types, unknown risk and the known risk. The known risk is that when clients can at least understand and measure the risk they are taking. That is known risks. They can accept the results. You know what is going to happen. You will be mentally prepared. On the other hand, the unknown risk is when the risk they believe they accepted include outcomes that are outside the bounds of what they expect. What you can see that unexpected things are happening. They expect and can reasonably understand. That is called as the unknown risk. Behavioral problems often begin with this. And if you talk about the risk capacity, the ability to absorb losses with having one's financial goals are jeopardized in case of the traditional finance or historical finance. In case of the behavioral finance, the risk appetite is the amount of risk that one is willing to take in pursuit of reward. We all know that the profit is the reward of risk taking, and that rule applies in case of the behavioral finance. Because there are some behavioral biases we should understand here at this moment, and why it matters. Anyone knowledgeable in financial market understand that there are numerous variables. What these numerous variables are? These variables that affect prices in the securities market. Investor decisions to buy or sell may have a more distinct margin that affects impact on market value. That is very important, which has an impact on the market value than favorable earnings or promising products. So the role of the behavioral finance is to help market analysis and investors understand price movement in the absence of any intrinsic changes on the part of the companies or the sectors. It provides an overlay to the standard theory. It provides a framework to understand non-rational investor and the market behaviors. Investors are not totally rational. Investors often act based on imperfect information. And also, the investors make non-rational decisions in predictable ways. Markets, my dear colleagues, may be difficult to beat. Markets may be difficult to beat in the long run. In the short term, there are anomalies and excesses. So, if you talk about the aspects of the behavioral finance, you find that there are two aspects of the behavioral finance. These are the behavior of the investor on the one hand and behavior of the market on the other. For example, if I tell you how it works, you can understand. Students are here. I'm trying to come down to their level so that they understand. There are some students who are not basically from this field. They can also understand what is basically the concept of the behavioral finance. Suppose a lawsuit is brought against a tobacco company. Understand? Investors know that when this has happened before, the share prices of the tobacco company has fallen because it is based on sentiments. With this in mind, many investors sell off their holdings in the company because they are afraid. This selling results into further decline of the securities value. Sentiments prevail. Demand decreases. Investors in other tobacco companies may fear similar lawsuit, knowing that such a lawsuit was brought against one tobacco company. These investors may sell off their holdings for fear of loss. The securities prices of other companies in the industry consequently decline as well. That's what I'm telling you about the behavioral finance. All the while, none of these tobacco companies took any action or had a judgment against them that intrinsically lessened their worth. This is the sort of issue that behavioral finance attempts to explain. So, my dear friends, when you talk about the investors and the market, you can say now that the investors are rational beings. They consider all information and accurately assess its meaning. Some individuals, agents may behave irrationally also, or against predictions also. But in the aggregate, they become irrelevant. They are not totally rational. Often act based on imperfect information. This is what we have heard, we know about the investors. When we talk about the market, markets quickly incorporate all known information. Markets represent the true value of all securities. Markets may be difficult to beat in the long term, and markets in the short term, there are anomalies and excesses. So dear friends, in case of the conventional finance, what happens and what happens in case of the behavioral finance, Professor Shailendra has already mentioned. I will add only 2-3 lines on this. That in case of the conventional finance, prices are correct, equal to intrinsic value. Resources are allocated efficiently, consistent with efficient market hypothesis. And in case of the behavioral finance, I will answer you in one line that what if investors do behave rationally? Okay, now you understand the difference between the two concepts of finance. There are some basic behavioral characteristics which we should discuss here in this note to make even a layman understand the entire concept of the behavioral finance. Loss aversion, anchoring, diversification, disposition effect, herding, media response, and optimism. I will quickly throw light on these characteristics of the behavioral finance. Let us talk about the loss aversion. Loss aversion devotes significant attention to assessing risk. It assesses risk tolerance. At least once per year, possibly using a risk tolerance questionnaire. It assesses gains and losses less frequently. Anchoring describes the common human tendency to rely too heavily on the first piece of information. On the first piece of information offered, that is the anchor, when market making decisions. Secondly, anchoring, in case of anchoring, one has to be aware of investments anchors and use relevant benchmarks in comparing the investment portfolios. And they have to be cognizant of long-term goals, not short-term fluctuations. Try to understand these points are very important, very meaningful. And when we talk about the diversification, we make sure that we are properly diversified and we don't let investment options dictate the asset allocation. And diversification, work with the financial or advisor to determine asset classes that will maximize return and reduce risk. That's the very important thing. Diversification maximizes the return and reduces the risk. You cannot keep all your eggs in one basket. Next is the disposition effect. The disposition effect refers to people's tendency to two things: hang on to losers too long, sell the winners too soon. This allows them to enjoy the feeling of winning faster and defer the pain of loss. And dear colleagues, friends, students, herding, the word herding, herding is a kind of word which is very much applicable in case of the behavioral finance. Investors have a tendency towards herd behavior. झुंड वाला, जिस तरह एनिमल्स रहते हैं झुंड में, एक के पीछे चलते ही भेड़ चाल होती है, similar to that. Line. It studies the effects of the herd behavior. Disproportionate flow of money into 4 and 5 star rated mutual funds. और लोग करना हम इसमें शामिल हो जाएं. And ratings have a lack of predictive value. Another characteristic is the media response. that is also having a very important effect on the behavioral finance. It is about the study of effects of news on the investment decisions, dear friends. Two groups, one received news and one did not. The group with no news outperformed the group that received the news. Nowadays, if you sit on the television, you will find that you will become hopeless. So many news are there. It will make your life miserable if you listen to all the news. So is in case of the behavioral finance. People often feel the need to react to new information. And news is often irrelevant to long-term performance and is often misinterpreted. Information overload can cause stress and also, my dear friends, optimism. Professor Ranjit, is there still time for me? How much time can I take?
Sir, we can have time. We have time up to 11 o'clock.
Okay, fine. I want to people to enjoy this rather than
Yes, sir,
change their behavior.
Yes, sir.
Behavior sound towards me. Anyhow, next thing is the optimism. In case of the optimism, we all know people believe it is likely that good things will happen to them and bad things will happen to others, isn't it? This is what we perceive. They believe others are more likely to have a heart attack, develop cancers. They believe others are less likely to become rich and become famous. You understand my point? How important this point is. This is called optimism. This is called optimism. हम सुनते थे बचपन में कि कौवे दिन भर काम करते रहते हैं. वो क्या करते हैं? What do they say? क्या कहते हैं वो लोग? They say कि सारे जानवर मर जाए और मैम हमको खा ले. This is their philosophy. Okay?
Yes, sir.
So, when it is their philosophy, all the animals do not die. We understand very well. अगर सारे जानवर मर जाएंगे तो फिर क्या होगा दुनिया में? ऐसा नहीं है. It's not like this. The problem that we are talking about there is that optimism in case of the their finance is very much there. And I told you, as I said very clearly, that the people believe it is likely that good things will happen to them and bad things will happen to others. हमें क्या करना है? What we have to think, we have to think good for us and good for others always. जैसा हम अपने लिए चाहते हैं वैसे अपने भाई के लिए चाहें. दुनिया में सारे लोग भाई बहन हैं. This is the perception of the society. ये सब लिखा है किताबों में. What we believe? What we are likely to think? That other person have a heart attack, develop cancer, have some other diabetes, sugar kind of problems. They want to become. They don't want others to become rich. They don't want others to become famous. आपने शायद फिल्म देखी होगी, Three Idiots. उसमें एक बात कही गई थी कि if अगर एक बार बच्चा फेल हो जाता है तो सबसे ज्यादा अफसोस जो है उसका दोस्त करेगा, और सब अगर टॉप करेगा तभी उसका सबसे ज्यादा जो अफसोस करेगा उसका दोस्त करेगा. Anyhow, let us come to the main thing. We are talking about the behavioral characteristics and the behavioral biases. Here, we will fail in our discussion if we don't talk about the narrow framing, mental accounting, regret and avoidance, and prospect theories. Prospect theory. These are the behavioral biases, my dear colleagues. Narrow framing is nothing. It is simply how the risk is described. Risky losses versus risky gains can affect investors' decisions. Investing in a series of propositions, not a single event. Performance should always be viewed within the context of total net worth. And in case of the narrow framing, look at long-term goals, not short-term results. Long-term goals are always for long-term benefit. Mental accounting is something where investors may segregate accounts or monies and take risk with their gains that they would not take with their principal. Then regret avoidance investors blame themselves more than an unconventional or risky bet turns out badly. कभी कभी जो है जब आदमी पछताता है तो अपना पछताता है. That is the situation. Next is the prospect theory. There is a conventional view that utility depends on the level of wealth. We all know very well. And the behavioral view is that utility depends on changes in the current wealth. So you can imagine the difference between the two kind of views of the prospect theory. One is the conventional view that says that the utility depends on the level of wealth. And behavioral view says utility depends on the changes in the current wealth. So you can understand what is the main point that we are referring to discuss here and what is the practical application of this kind of biases. You see, behavioral biases would not matter if rational outragers could fully exploit the mistakes of the behavioral investors. You see, there are some fundamental risks. Markets can remain irrational longer than you can remain solvent. Intrinsic value and the market value may take long to converge. You see, there's implementation cost. Transaction cost and restrictions on short selling can limit arbitrage activity. And what if you have a bad model and the market value is actually correct? What will happen? You can imagine. So it requires technical analysis which attempts to exploit recurring and predictable patterns in the stock market. Prices adjust gradually to a new equilibrium. Market values and existing values converge slowly. And my dear friends, this position effect, if I don't take up here, the discussion will remain incomplete. The tendency of investors to hold on to losing investment is very important thing. Demand for shares depend on the price history. It can lead to momentum in stock prices. So dear friends, if we come to the concluding point, if we throw final light on this discussion that we have made on the behavioral finance, you have noticed here how things have changed over a period of time. How things have changed when the behavior, how things have changed when the psychology has been added to economics and finance. So you can say here briefly, being consciously aware of these biases that we have mentioned in our previous discussion, or irrational behavior will allow us to better make investment decisions. Will allow us to better make investment decisions. And also, it will help us practice critical thinking and study our thoughts process during the investment decision making. Because this is a very crucial phase. It is do and die kind of situation. I have seen people becoming bankrupt. I have seen people suffering from the heart attack also. I have seen people having hypertension. I have seen people having diabetes because of the sentiments. Sentiments of the market has a direct effect on the sentiments of individuals. So the personality of a person becomes very important here. What kind of personality he has? What is his endurance level? It allows us to provide better investment recommendations to our clients if we are investment advisors. So I hope these points that we have discussed here under the head behavioral finance very clearly made us understand both the aspects of the behavioral finance. There is the behavior of the investor and the behavior of the market. And you have seen that the markets may be difficult to beat in the long run. In the short run, there are anomalies and the excesses. Investors are not totally rational. They often act based on imperfect information, I tell you. And they sometimes make non-relational decisions in predictable ways. Anyone knowledgeable in the financial market understand that there are numerous variables that affect the prices in the securities market. लोगों को मालूम है ये बात. Investors' decisions to buy or sell may have more distinct margin effect impact on the market value than favorable earnings or the promising products. So, my dear friends, finally, the role of the behavioral finance is to help market analysts and investors understand price movements in the absence of any intrinsic changes on the part of the companies or the sectors. With these words, I once again thank Professor RanjitSingh13 for coordinator of this international conference on the behavioral finance for inviting me, giving me an opportunity to interact with you. And I thank you all once again for giving me impatient help. Thank you very much.
Thank you, sir. I'm grateful to you for the helpful perspective you provided. With such a short period of time, you have provided us with a SHIFT foundation course on behavioral finance. Addressing such detailed points in intelligible language is something that only expert can do. And it was similar to having a 360-degree picture of behavioral finance. And thank you for giving idea about all the biases, theories, rational, irrational perspective, approaches to study, and most importantly, explaining the importance of behavioral finance. I hope your words will increase the fascination of researchers towards behavioral finance. Thank you, sir. And now moving forward, we have Professor Vijay sir here. Professor Vijay sir is a Dean of Student Council. As stated by Professor RanjitSingh, he is very supportive and always help us in all the intellectual events. Welcome, sir. Thank you for joining us. Your presence is of great pleasure for us. Thank you. I request you to please address the gathering and give your valuable words. Over to you, sir.
Thank you, Kajol. So, chief guest of the event and our keynote speaker, Honorable Professor Nawab Ali Khan, sir. Head of the department, Professor Shailendra Kumar, sir. The organizers of this conference, Professor RanjitSingh, sir, Professor Shashikant Rai, Professor Saurabh Mishra, all the invited guests, speakers, faculty members, and my dear students. So welcome all to this international conference on behavioral finance. Professor Shailendra Kumar has given a wonderful speech, and then he talked about the success of this particular conference. Professor Ranjit sir has mentioned about 120 papers, and now we all have witnessed the keynote speaker and the keynote speech by Professor Nawab Ali Khan. So, like you have correctly said, Kajol, that it is a 360 overview of overall this financial behavioral finance. And now we can say that this conference would not be called successful if Professor Nawab Ali Khan has not given his keynote address to the gathering. So, sir, thank you so much for this, for your time and this wonderful speech. You have covered each and everything, and there is nothing left for others to talk about. So I have taken some of the input from you. So I will talk about in some technical sense. I will try to summarize a little bit because I am very far from this particular topic, but I work in the area of machine learning, social network analysis. So I'll try to club some of the concept with this. So yesterday when Professor Ranjit invited me for this event, so I was thinking that I am going to talk in this particular event. And then I realized that this behavioral finance, and all of us have a particular behavior. And this finance is everywhere in our lives. So we cannot actually all of us are actually working in this area of behavioral finance. Okay, knowingly or unknowingly. So then I searched for some tools that what can be the possible tools. Then I found many tools like there was some FinWorks, there was some Behavioral IQ, there was some Essentia software. So they all are helpful in modeling this kind of behavioral finance, and they can be helpful in order to understand your own pattern for investing and for other financial things. So the important aspect these days, people are using machine learning for all these kind of softwares. So this area is also very important. So machine learning, I think you should also consider this along with your behavioral finance. And second part is the sentiment analysis or social network analysis, which Professor Khan has already addressed. So clubbing this behavioral finance along with the machine learning as well as social network analysis or sentiment analysis plays important role. And all these things are required. These three pillars are very much required if you want to become a successful investor. So if you see that people, these software developers, these companies, they are talking about the behavioral alpha. Okay. So they also talk about the cognitive bias. It is always there. Okay. So what happened? We say that if we go with the theory, then we say that you should have all the facts, then you can invest and do something. You can do transactions. Okay. But what happened? All of us cannot have all the facts about all the companies and all the markets. Then how can we apply all those facts? Okay. So in that case, our own behavior will be helpful. So analyzing our own behavior, and then along with the same time, we also go with the others' feeling. Okay. So sentiment analysis, we are doing the sentiment analysis, gaining the inputs from the others, the social media, social networks, that what others are thinking about a particular maybe stock. Okay, like sir has given an idea about the LIC IPO recently, then Paytm. Okay, so all these things. So it was very much motivated by many persons. Okay, so people were actually not only believing on their own ideas, but also they were believing on the group's idea. Okay, so what other the social network, social media is promoting. Okay, so there is a lot of impact on the social media on all these aspects. Okay, so I will not take much of the time. I will just say that you should also consider about social network analysis, machine learning, along with this behavioral finance, in order to understand about your own patterns, to learn from your own mistakes. So there is a learning known as reinforcement learning from the machine learning point of view, and that helps you in order to learn from your own mistakes. Okay, so I think you should consider going through all these type of concept. And I was looking about the topics of the conference, and I found all these things are there. So that is the most important part of this conference, that the organizers have actually covered all the relevant topics related to this. And I would now like to congratulate the overall team for organizing this international conference on behavioral finance. Professor Ranjit Singh, he's actually, you have already seen that he's a very good writer, he's a very good poet, and he has written many books related to not only this field but many other fields. So I think you should go through his books as well. And thank you so much for giving me this opportunity to talk something about this particular topic, and welcome all the participants. Thank you so much.
Thank you so much, sir, for your kind words. And now it is my pleasure to extend an invitation to Dr. Shashikant Rai, sir, here for the vote of thanks. Welcome, sir, and over to you.
Okay, thank you, Kajol. I'm audible.
Yes.
Okay,
yes,
thank you. So I really am very much glad and very much obliged by Professor Ranjit sir for giving me the opportunity for having the vote of thanks. And it's a very tough job to remember everyone, because such type of events cannot be organized by the role of each and every person who are visible on a screen and who are not visible on the screen. So I thank everyone who was involved with this program, who is involved with this program. So I first of all thank our keynote speaker, Professor Nawab Malik sir, for his great view. As he started that he has unstructured knowledge of behavioral science, but his words, his lecture would be a point of research for the people who would be coming in the area of behavioral finance. So thank you so for your great words, and thank you for your knowledgeable words. And we were really enlightened by the knowledge, because the knowledge imparted or knowledge shared by you was most of in a practical sense that we require that we require to be inculcated in the people when they are taking decisions, any type of decision, financial or whether it is the decision related to any aspect of the life. Now, coming on to the Professor Vijayan sir, as he is, I'm very fortunate that he is my guide, and he has been always supporting me throughout my academic field as well as personal field. He has been a true guide in the true sense when we say guide. And as you see, it's not that we have just asked him to join this the conference because being that he is my guide, but he has been working in the area of machine learning, deep learning, and it requires to study the behavioral aspect. So you from his whatever short words which he has shared, you must have known and comprehended that he is having insight of the behavior. Behavior is applicable in every field, whether you talk about finance, whether we talk about I'm in the field of operations. Dr. Saurabh Mishra comes from the field of marketing. So, sir, as Professor Ranjit sir, as I already said during the summer school, that he is the captain of the ship. So we are a helping hands. Professor Vijayan Singh has been the radar of the ship. Being outside our department, he is from IT department, but he is guiding us. Without that, we cannot reach our destination. So I thank Professor Ranjit sir, Professor Vijayan sir. Professor Ranjit sir has been very instrumental. He always comes with this new idea that after the summer school we will be starting this conference. So he not only he has provided us the well work, because as you know, IIIT being an IT institute and management department in this IT institute has always been the smaller brother, and so but the smaller brother is now growing younger. So and he is helping you can see the big brother, that is our IT department in our institute, as we are known for the IT skills. So with this program such as summer school on behavioral finance, we have not only have shown that the management department of IIIT Allahabad has always been a very good department in the case of placements and all that, but in the contribution to the academic field we have been trying. And the good part of this is that we have been getting a contribution from all over the world. In this conference, you can see the speakers are all around the world. So I thank everyone for being a part of this conference, the 2-day conference.
Sir, that doesn't mean.
Yes. So I really thank Dr. Saurabh Mishra, who has been the co-organizer with us. I thank Kajol. She has been very supporting right from the summer school to this conference. I thank Kajol, all the research scholars who is involved with this, all the supporting staff, all the students, and most important, all the participants who will be sharing their knowledge, we will be discussing. It's not only that you are just participating. Participation means a two-way process. So we will be sharing the knowledge in these 2 days, and we will try to add something to the knowledge of behavioral finance. So I thank everyone. So over to you, Kajol. Thank you.
Thank you, sir. And now, before ending the session, I would like to share some details about the conference. The technical session will start from 11:30. So I request every delegate authors to join the link in which they are enrolled. And now, yeah, okay. So we are ending this inaugural session here. And for that, I request you to all please stand up for the national anthem.
Please open up your videos, please, so that and stand up for the national anthem.